I call it spread trading, but it's basically an ATM in your living room. If you want to earn an extra $1,000 per month without having to get out of your jammies in the morning, then pay attention for the next 10 minutes because I'm teaching you how to make some serious side hustle dough by trading slow, low, and boring stocks. In this screwed up K-shaped economy that we got going, most Americans need a side hustle just to survive. But side hustles suck. You're driving around with someone else's greasy food in your car while wondering what the hell went wrong in there. That all ends today. If you follow the steps I'm about to lay out, you will make at least $1,000 extra per month. Just trading stocks in your underwear at home while sipping your coffee. My name is Rob. I'm a former mergers and acquisitions attorney at a top 10 New York law firm, a former faculty member at a top 8 business school, and I've been trading these markets for 25 years, and I'm here to teach you how to get rich smart, not quick.
Brilliant.
In this video, we're covering what spread trading is, how to find the boring stocks to spread trade with, the ideal market conditions for spread trading, and then finally, we're going to go to the charts and take a look at some spread trading in action. So, spread trading is very similar to another trading strategy called scalping. But scalping relies on pricey software to execute the trades. Spread trading is designed to keep the costs low so that the average investor like you and me can have a chance too. 'Cause why should the hedge funds have all the fun, right? So when we're spread trading, we're looking at a stock's chart to see the range of prices that the stock likes to trade in. Because certain stocks are very predictable in how high or how low they like to go. So if you know where that low price is, you can buy low. And once you own that stock near the low, you can enter in that sell order at maybe 5 cents, 10 cents above what you bought it at and book the profit. So on a 100 share order, you make $5, $10. And all this happens in a matter of 60 or 90 seconds at times. So success really relies on being able to execute the same trade multiple times throughout the day. So here's the math. Say you book a $5 profit. You execute 10 times in a day. That's $50 per session. On average, there's about 20 trading days in a month. 50 times 20, that's $1,000. You got your $1,000 a month and you haven't left your house yet. It really is that easy. Spread trading is perfect for new investors who don't have a lot of money. It's a lot of fun and it teaches you a lot more about the market and about stocks than you think. In fact, I'm using spread trading to teach my 15-year-old son the markets. But in order to spread trade profitably, you need to pick the right stocks on the right day. And there are literally thousands of stocks and ETFs to trade. So knowing how to filter your spread trading stocks is vital. Ordinarily, I'm telling you to research the fundamentals of the company. I'm telling you to get to know the company's cash flow, the competitive moat, the PE ratio. Not so with spread trading. Spread trading is all about the stock and nothing about the underlying company. So when spread trading, you want stocks to have the following attributes. First, the stock trades between $20 a share and $80 a share. You're buying stocks in 100 count orders, so you need to make sure that you have enough money to fill the orders. So sticking with stocks between 20 and 80 a share is a good guideline for you so you don't run out of money. Second, the stock is a component of the S&P 500. We want stocks that are widely held and very well known because that means a lot of buyers and sellers every day. That liquidity will make your trades execute a lot faster and a lot better. Also, it means you're going to be protected from a really drastic and fast price drop. Because remember, those meme stocks that are up and down all over the charts every day are the sworn enemy of the spread trader. Third, we want the bid spread at 4 cents or less. The narrower the bid spread, the better. Because narrow spreads mean shares are constantly changing hands, which gives you plenty of opportunity to get in and out and to buy and to sell. Fourth, the stock has held a predictable price range for at least 1 hour before you enter your first trade. Remember that predictability and boredom are the crux of spread trading. Stocks are most volatile, meaning they go up and down the most in the first and last hour of trading. So that means 9:30 a.m. to 10:30 a.m. when the market first opens and 3 to 4 p.m. just before the market closes are completely out for spread trading. What I like to do is to use that 10:30 a.m. to 11:30 a.m. block to filter out stocks that are going to be predictable for that day. Once you have that predictable trading range and those predictable stocks, it's time to go to work. Once you identify your spread trading stock, you need to identify the range. I want you to think of the trading range like the house that the stock lives in. At the top is the ceiling. That's the price above which the stock doesn't really go. It's the top. At the bottom is the floor. That's the price below which the stock doesn't go. And if the stock stays between its ceiling and its floor, you're going to be able to buy low, sell high, wait for it to come back down, buy low, sell high again, and keep on repeating and booking the profits. But watch out, if that stock drops below the floor and into the basement, you got to sell and get the hell out because something just went wrong. Now it's time to execute your first order. I want you to place a limit order for 100 shares at the floor price plus 3 cents. Now we wait for that stock to go to the price. Once it hits the floor price plus 3 cents, it's going to do what's called executing, meaning it's going to buy the stock for you. So you're going to now have 100 shares, and you're going to set the sell order now, another limit order, at 5 cents above the price you just bought it at. You're going to wait again. Once that stock hits the 5 cents above the price, it's going to sell automatically. And you've now just made $5, right? 5 cents profit per share on 100 shares, $5. Now you book the profit and you just keep repeating the process. And you let that spread trading ATM start spitting out the cash for you. I absolutely love spread trading for new investors because it's educational, profitable, and low risk. But it only works if you're disciplined. And I don't want you ever to do any of the following. Do not spread trade within an hour of market open or close. Don't hold on to any stock that breaks below its bedroom floor. That means going into the basement. Just sell it and wait for the next opportunity. Don't ever spread trade with a meme or one of these hyped up bullshit stocks. Don't ever place market orders. Always use limit orders. And don't ever trade on margin. The perfect day for spread trading is when stocks sell off or rally hard at the open of the market. That way, by the time you place your first order, the market's lost some of its steam and is now moving sideways. Not much up, not much down, just enough movement to make you some money. Personally, I love Friday afternoons during the summer. It doesn't get much slower or much boring than that. All the big players are done with work for the week, and there's just a lot of predictability within the range to make some money. And that's exactly the kind of boring that we want. Remember, we're not buying because we think the stock is going to rocket up. We're buying because we know that the stock is stuck in a predictable range of high and low, and we can buy low and sell high. Okay, on to the charts. We are recording this on Friday, June 26, 2026. And you know how much I love doing some spread trading on Fridays during the summer, and it just happens to be a Friday during the summer. So today I'm taking a look at AT&T, ticker symbol T. AT&T trades between $20 and $80, around $22 a share. It's an S&P 500 component, and it is as old as dirt, and it's been around forever, and you really don't get much more boring and slow than AT&T. So it is perfect for what we're looking to do today. So let's apply some of our rules. First, remember, during that 9:30 to 10:30 hour, the open bell, we don't like trading, and here's why. Take a look at that volatility. Up, down, nothing predictable. It's breaking out of ranges like crazy. Then by 10:30, we settle into a nice downward trend, and it kind of just sits there for a while. Then we start running up, and running up quickly into the noon hour. But by 12:20 or so, something interesting starts happening. We start leveling off. We might be finding our predictability. We might be finding that stability that we need to do a good spread trade. And I think we have it. By 1 o'clock, things look like it's kind of gotten stable. So let's see if we can figure out what the ceiling and what the floor is for the price. Remember we talked about that house that the stock price likes to live in? Well, we're going to build the house and figure out where the ceiling and the floor is. So taking a look from that 12:20-ish time period to about a little bit after 1, looks like the floor is at about $22.50. Now, we put our buy orders in at 3 cents above the floor level. So we're going to enter a buy limit order for 100 shares of AT&T at $22.53 a share, which is 3 cents above that floor we just set. Now we wait, and we wait for that stock to drop to $22.53. And it looks like the first order executes at 1:09 p.m. at $22.53 a share. We now have 100 shares of AT&T. We are going to immediately put in a sell order for those 100 shares at 5 cents above what we bought it at. So $22.58, because we bought it at $22.53. And that's going to make us $5 if the trade executes. And look what happens. AT&T hits $22.58 just 3 minutes later at 1:12 p.m. You just made $5 in 3 minutes. Now, you're going to immediately enter another buy order at $22.53. And it looks like it's going to execute at 1:22 p.m. Once it executes, once you've owned that 100 shares again, you want to immediately hit the sell button at $22.58 again. The stock looks like it hits $22.58 at 147. So you just made another $5. But remember that you're going to be trading while you're doing other things like going to the gym, folding laundry, pretending to be paying attention on a Zoom. Also, as you grow in your confidence, you'll be able to take on more stocks simultaneously. For example, today I was trading Altria, AT&T, and Pfizer all at the same time, all spread trading. But I don't recommend starting off with more than one stock. Start off with one stock, make some money, get used to it, build up some confidence, and then add a second stock. Then add a third stock, and so on and so forth until you're rolling in the dough. So that's the living room ATM. It's not a miracle. It's just a boring little strategy for boring stocks on boring days. You buy 100 shares, you sell it at a nickel higher than you bought it at, you take the $5 profit, and you repeat until you're wealthy. And before you know it, you'll be spread trading thousands of dollars per month in your tighty-whities instead of door dashing for peanuts. So go out there and run your stock screens, and then let me know in the comments what you find out. My name is Rob. Thank you so much for watching, and we will see you next time.